We thought of getting you somebody who interacts with the top institutional investors very closely, recommending them top stocks. We're talking about Ravi Muthukrishnan of Elara is joining us on the show today. Ravi, good afternoon. Thank you so much for your time. Talk to us about the discussions you're having these days with your institutional clients. At least the FII ones, are completely, buying almost 3,000-4,000 crore every day. Talk to us about the feedback you're getting.
Now, I think most of the FIIs now think that India as a story, as a domestic story, is a good story to invest in, unlike most of the emerging markets. If you see, since the time COVID hit us, India has been the best performing EMs. Indonesia has been an exception. And I think this perception of FIIs, that India will be a good story moving forward, because of mostly because of its domestic consumption. I think more money will flow into India. We already had about $9 billion which came in since COVID, and I expect this number to only increase moving forward. The other point which I think they all think that is that though most of the sectors in India, particularly IT, pharma, metals to some extent because of the beta rally, financials again to some extent for the beta rally, they think there's immense of scope for the markets to broaden. To give you a sense, out of the Nifty stocks, only about, say, 23 stocks in Nifty have recovered and outperformed Nifty. Whereas the remaining part of them, they still haven't hit their 5-year average forward PE, which is to say that there is immense scope for the markets to broaden from here, from these levels as well. And I think in that broadening, mid caps also will find a huge place in the outperformance moving forward.
Right. Ravi, before I come to stocks and sectors you're researching closely with your team, I want to understand from you, you've analyzed cycles, historic cycles. You're a data person. What does the data tell you when you compare, where we are in the cycle right now compared to previous cycles? There's so much of, tug of war between the recovery, quality of recovery, etc. But what is market pricing in? Where are we on the cycle compared to past recoveries? If you could throw some light.
I can't give you exact statistics now, but the point is that the good reason to think that the recovery is on is that, the metal stocks are doing well, the beta stocks are doing well, the financials are doing well. In all the historical cycles, we have seen that, most of the beta stocks starts to do well, followed by private banks, and lastly, the consumption stocks come in. I think this is what exactly is playing out today. Consumption stocks like Hindustan Unilever, Nestle, though they are doing very well in terms of volume growth and stuff like that, I think as of today, people are looking at more attractive valuations within the FMCG space. So I think moving forward, I think this rally will start with metals, will start with financials. And for financials, we also see that the earning numbers are looking to be healthy in Q2 FY21. Largely because of the credit costs coming down. I think we will expect more of buying in metals and buying in the financials moving forward.
That's quite interesting. Metals and financials is something where you expect more buying to happen. Let's scratch that point of broadening of the rally a little more. We saw the front lines actually making a fresh high, but broader markets are still far away, small cap, mid caps in particular. Whereas in US, we've seen that Russell 2000, say in the last 6 to 8 weeks, has started outperforming the Dow very, very convincingly. Do you see India also, the broader market indices, both small cap, mid cap, to start outperforming? And if yes, what kind of themes or stocks, if you have on your radar, which look good?
So to start with, going back to your earlier question, we spoke about which are the sectors which really did very well post the COVID. But some sectors were glaringly left out. And some of them include your cap goods, utilities, infrastructure. Telecom, in fact, was the one which underperformed. Metals did perform well, but there's still a lot of steam in metals, I guess. Most of these sectors like cap goods, infrastructure, they will all come back very strongly because of the government push. And because, of all the initiatives the government is taking today, especially in the infrastructure space and in the cap goods space. Metals, I think, will continue to do well, primarily because the world will come back to normalcy, if not today, if not tomorrow, at least 6 months down the line. And the recovery process is on. As regards telecom, the fundamentals are looking slightly better than what they were in the past. So these sectors definitely will start to look well. If you want to look at some sectors in the cap goods space, we like companies like, KEI, KEC, RITES, these three in that order of priority. In the infrastructure space, purely roads, we like PNC infra. We cover metals, but we have very few stocks under coverage. We like some of the energy stocks, especially the downstream energy stocks, who are making a good amount of money from the marketing initiatives rather than the refining initiatives. Obviously, we also like companies obviously we like Reliance, though as of now, the stock has been slightly underperforming. But in the longer term, it's a good story to invest in because it's more of going to be a emerging new economy stock than being an old economy stock. Coming to mid caps, I think mid caps will start to do very well for three important reasons. One important reason is mid caps even today are trading at a small discount to large caps. And in terms of their fundamentals, in terms of their valuations, and in terms of their earning recovery, I think they will be faster than the large caps. The third is the point I made before. Institutional flows into India is only going to remain strong, and they have to have a place to invest in. So I think mid caps will really start to do well. And of course, a very few of the smaller cap companies in the top bracket of the smaller categories will start to do well. I'm not sure about whether the entire small cap sector will, though of course they did exceedingly well post-COVID. I think they were the ones who had the highest level of outperformance. Nifty did 69. I think mid cap did about 80. And 84-85% was the returns you got from small caps. Will they continue to do well? I think certain pockets in small caps will do well. But in mid caps, I think the whole asset class will do well, and particularly those. We mentioned a few names. If you see one of my reports, which I did a couple of days back, I put a framework where I said that companies which have a fabulous spread in the mid cap space, when we say spread, their returns are greater than their average cost of capital, they will all start to do well. We highlighted about 10 names in that space. One is Kansai Nerolac, then we said Relaxo, Astropoly, then Page we like because in the retail space, innerwear, footwear, and groceries in that order. I mean, the order is groceries, innerwear, footwear, and last is apparels. The first three categories we think will do very well. In that context, we like Relaxo, Page, and Astropoly, though it doesn't fit into these three. We like paints, I said Kansai. We like companies in the consumer discretionary space, especially which are into selling grinders, fans, and stuff like that. Crompton Consumers is a very good name to look at. We like some good pharma plays in that space. We like Ipca Labs. And we like, of course, Coromandel because of the large impetus which we're getting for the fertilizer business. And we like companies like Imami, for example, because Imami is doing pretty well in terms of some of their product segments. And they had a fabulous earning momentum last quarter and this quarter as well. And Mindtree we like one of the names in the IT space, Mindtree we like. So if you see that report, we had about 10 names in that. All of them, we think that because of their ability to generate more spreads going forward, they will be the companies to watch out for.
Ravi, very quickly, what are your thoughts on some of the get out of home plays like aviation globally? Aviation is doing well. India too. There's a lot of positive news flow on SpiceJet and aviation data has also come out. Any view there? Crude is structurally low. There's a lot of positive developments happening.
Correct. The passenger growth definitely is good. It's reached about 70-80% of the pre-COVID levels. My sense is the government also will now start to give you a better PLF. Right now, it's about 70%. I think it will now go up to 80% because of the passenger flow, which is much, much better than any part of the globe, where I think the PLF is roughly about 50%. I think there ends the positive. The negatives or the other factors one has to be very cognizant of is that the balance sheets are not very great. They all have a lot of COVID-related liabilities. For example, lease rentals they have to pay. They have to pay for parking. There are lots of other charges, and they have to pay for maintenance. How much have they paid? How much have they not paid? We don't know. Crude definitely is a big positive for SpiceJet, especially after they got this MAX news which came in, because they're all fuel-efficient engines. But because of the balance sheet issues and because of issues relating to where this COVID will eventually end up, how long is this going to take? Is there going to be a second, third wave? These are the issues one has to take cognizance of before one takes aggressive stand on the aviation sector. Plus, there's going to be a lot of consolidation in the sector. The weaker players are going to go. We already see that news about AirAsia. And in such instances, I think I would rather want to look at more stable...
All right, completely running out of time, Ravi. Love to have you on the show.
Yeah.
We'll get you once again one of these days. Thank you so much for your time today.